trading is chaotic, markets are chaotic, but life is chaotic, right? It really is. And so if you can navigate through that chaos without getting upset, life gets a whole lot easier.
This video is sponsored by Suns. Suns are a men's healthcare brand that offer clinically proven licensed hair loss treatment for less than the cost of a coffee every day. Follow the link in the description and use the code KickoffSessions40 to avail of 40% off your first order. All right, man, let's kick off. Thank you, Simon, for joining me yet again on Kickoff Sessions.
Hey, Darren. Great to see you again. Absolute pleasure.
Man, this is the 4th time we've been recording. Have you noticed that?
Is it really?
Yeah, because
we did that special with Rocco, the 3 of us. That's right. Yeah.
The 3 of us. The first time, I think it's interesting because the first time was like just trading and investing, probably like May last year.
Right.
And then me and you did it again around August, September, but that was when you were launching like all of your online platform and you're building that out.
That's
so
right.
Like I've seen you move from like being just on the trading side to kind of starting an online business. And then at Christmas, then we just kind of like messed around and fucked about, you know?
That's
but
right.
you get me? It's interesting to see like over the course of 6 months, how much you've changed already in that period.
Yeah, lots been happening.
So it's cool. So anyway, idea for today is to get into how to beat the recession. Bit clickbaity, but so be it. So I think there's multiple different ways to obviously do it, but I've been seeing like a lot of people chat about, you know, investing, how the investing kind of scene has kind of changed. Remember the last 2 years, like everyone was like buying up anything and it was working. But now like obviously that model didn't work. You actually called that and Rocco back in December.
Yeah.
So like what do you think about like how things have changed since we last spoke at least?
Well, I guess the big change is we've seen a massive surge in inflation. And that was becoming apparent when we caught up in December, but it still had plausible deniability. You know, we still had the Fed chair telling us it was transient. Now, all of that language has gone away. We had CPI print at 9.1% a couple of weeks ago. It's the highest CPI we've had since December 1981. We've also had 2 consecutive quarters of negative GDP growth in the US, which meets the long-standing definition of recession. All right, that definition has been understood since 1974, even though there are attempts at the moment to try and change the definition of recession. So, yeah, I guess a lot's happened in terms of economic growth has slowed down a lot. Company earnings have slowed down a lot. Inflation has obviously gone the other way. It's accelerated. And that's meant investors have had a fairly tough 7 months year to date.
How was that? What was the reason why it changed though? Because of course, like Ukraine war started and stuff like this, but back in December, you know, things were still going really well and things were kind of pushing on and whatnot. So it wasn't just the Ukraine war that maybe turned things around, you know? It was happening for so long. You had QE going on for so long as well. But was this a ticking time bomb? It was going to get to this stage anyway.
I think it was going to get to this stage anyway. The Ukraine invasion by Russia provided a catalyst, provided an excuse, I guess, for these views or you know, things that were bubbling away to manifest much more quickly. In terms of the inflation thing, I mean, you don't print $9 trillion in a central bank balance sheet in a vacuum. Yeah. And you've got to remember that the Fed was still very loose and printy in 2021 when the economy was already recovering quite well. And there was $1.9 trillion of fiscal stimulus coming down the pike as well.
But like the average investor, I suppose, like is not that clued into this. And this is kind of the issue. Well, the problem with it and the risk that's involved is that like, you know, you see growth stocks going crazy last year and then coming to a bit of a slow stagnation towards the end of last year. But people were still kind of dumb to it. I was definitely ignorant to the whole idea of it. Just didn't really understand like what could really happen so quickly and so sharply like it did, you know?
Absolutely. And it gets back to, you know, a lot of people they invest according to a story, all right? It's called narrative investing. You hear a story about a sexy growth tech stock and you think, oh, I like that story. I'm going to invest in it. And it's how most people allocate their money, their investment money. But the problem is a story is just that. It's just a story. It's kind of often a little more than imagination, really. It's what you think perhaps ought to happen in your opinion at some point in the future. The only real truth in markets is price. All right. And that's what I follow. And that's what I encourage people to follow, because when you see what price is doing, whether it's in an uptrend or a downtrend, that will lead you to the ultimate truth of whether an asset's likely to rise or fall in value.
That's interesting because like a lot of retail investors would have just been picking stocks like aimlessly based on stories, confirmation bias, making sure that whatever, trying to validate their own opinion and their own hypothesis, and then not even looking at price, like because it's very difficult to understand it in relation to other equities. Like so, Amazon before they did a stock split was like 2,500 USD. You compare that to Visa, which is like 175. So maybe for the retail investors, like, can you give a kind of more emphasis on like how price is even determined?
Well, price is it's a function of supply and demand. So the price in any market is a function of supply and demand. And who are more motivated, the buyers or the sellers? And that is how price is determined. People talk about fundamental analysis, looking at things like valuations and free cash flow and what have you. And fundamentals only affect price to the extent that they affect supply and demand. So yeah, you could argue if a company's got really good fundamentals, that should create more demand for that company. But if in the meantime people get scared, or there's a war, or other scary stuff is happening, you can find that sellers become more highly motivated, and those fundamentals get completely ignored, at least in the short term.
Yeah, and especially the risk you carry with like single stock. So like if we're looking at it from like an investing perspective, like of course, and you just have that, is it idiosyncratic risk when it's just looking at one individual?
That's right.
Yeah. So like if you compare that to, let's say like, the approach of dollar cost averaging, Nick Magooly was on my show recently. He was talking about, just keep buying, like just keep dollar cost averaging through like the downturns. Max Pasham always kind of advocates that as well. So is there like a case you think for like, when we're going through this recession, which can last maybe like from 24 to like 48 months, to just keep dollar cost averaging? Like, is there a case for that? Maybe not into single equities, but maybe across the market, and that could be your strategy for long term?
I think it depends on what you're trying to achieve. I mean, if you look at the long-term return of the S&P 500, it's about 10% per annum. All right. So if you dollar cost average through a cycle, that's about what you could expect to earn if you're buying an ETF, about 10% per annum. And if that is the sort of return that meets your goals, then yeah, there's absolutely a basis for it. Now, if you've got $5,000 to invest and you make 10%, at the end of that 1 year, on average, you're going to have $5,500. No, it's better than a slap in the face with a wet fish.
But it's not worth it.
It's not life-changing, is it? And
the amount of time you put into it as well, mentally, and you invest,
and you check emotional roller coaster, exactly. and what have you. And sort of by about year 7.5, you might have doubled your money.
Yeah.
So yeah, if those sorts of returns are what you're after, then yeah, I think dollar cost averaging has its place. But if you're looking to kind of accelerate your wealth, or you're looking to generate a regular income stream from your investment assets, you need to have already accumulated a very large amount of risk capital for that to make meaningful returns.
That's interesting, because it's like you need to have money to make more money, because 10% on 5K is nothing, but 10% on 100K is a lot different,
Yeah, and 10% on $1 million is all of a sudden that's a decent income, right?
Exactly, but I think that's why, younger people kind of got discouraged, or people who were, and not younger people, but who were entry level into investing and trying to do this for the last two years, because they're like, even if I make 30% on 10K, it's not life changing. And Nick Magooly again was mentioning, he was saying like the stress you put yourself under to look and continuously go back over this, you could put that time into other things, which we're going to discuss as well today. But like putting that, the time you have, the limited amount of time you have, into building businesses or doing whatever, or in your case, learning how to trade. So I think it's obviously lifestyle situational. Like for me, I'm spread across multiple different things. I said this before, that I just don't think like just trading on its own or doing it in addition would suit like my lifestyle, because I'm doing obviously recording podcasts and whatnot, but everyone is slightly different. So like in the kind of investing kind of scene, what would you think is like, how should you kind of approach it? Is it for people who are much more passive like me, who are thinking like, okay, this is not capital that I need in the short term?
Yeah, if you've got very patient capital and you've got a very disciplined risk management guidelines and investment guidelines, yeah, absolutely. Just so long as you don't get scared when things get really rough and sell out at the bottom, which is what a lot of people do. You've got to be very disciplined with it.
How do you approach that though? Because that's so interesting to say. Like, of course, like, you don't shit yourself when it's at the bottom, but like in practice, then it's so different. For me, like, or other people, they could be sitting on massive losses over the course of 2022. Like, what would you advise someone in this scenario?
I would advise them to learn how to trade.
Hmm.
Honestly, I mean, my background is long-term investing. I spent 25 years working for investment banks, and I lost a life-changing sum of money in 2008 as a, long-only buy and hold investor, listening to who I thought were the smartest guys in the room at the time. And that was when I realized there's got to be a better way, and I completely changed my whole approach to markets.
What has taught through that kind of example? Like, if you don't mind, like, was it kind of your own personal capital?
Yeah,
Did you overextend it?
No, I'm talking about my own personal capital. I mean, 2008 was obviously a pretty rough year for the market. 2008, 2009, the S&P fell, 56%? But there were some fairly decent rallies along the way. And when we had a period in May 2008 where Bear Stearns got basically bought out by JP Morgan for $2 a share. And many people, myself included, thought at the time, oh, that's it. That's
the bottom.
The worst is over. That's the bottom. It's safe to get back in the water. And then, of course, we had Lehman's failure in September of that year. And I mean, and that had to be the bottom. That was such a devastating event. Lehman got left to the wolves. AIG got bailed out. And we all thought, right, this has got to be the bottom. And of course, the S&P fell, I think, another 20% from there. But trying to continually buy the dip based on belief and emotion and what you hope is going to happen can be a really fruitless strategy. It cost me a lot of money.
Hopium.
Yeah.
It's very, like, kind of worrying, to be honest, to hear like someone like yourself who spent many years in investment banks, the best banks, who's well educated, who's well put together, can find themselves in that position, because it's not necessarily your fault. It's just like, everyone's behind that kind of collective bias. So like, it's very difficult for younger people who are just like, oh, just throw it in and just worry about it later, that there's many different variables. It's multivariable, multifactorial. It's very complicated, and it's not as simple as what it's been made out to be for the last 2 years on TikTok, Twitter, whatever.
Well, actually, it's a lot simpler than you think. It's just that people don't have the tools to cut through all the bullshit and really look at and focus on what they should be looking at and focusing on.
Mm-hmm.
The finance industry likes to make out that it's very, very complex, because they like to tell the story that, you need us to help you navigate these troubled waters. Oh, and by the way, we're going to charge you a bunch of fees for doing so.
Yeah.
But really and truly, it's, everything in life, simpler is nearly always better. And it's no different in investment markets.
I know, absolutely. I'm laughing because when I was living in Ireland, there was like a huge investment firm in Ireland that was like, they're saying, oh, the average return will get you on your money. This is for younger people now as well, 4%. And then their fee is like 1.5%. And there was another percent, and there was another fee inside there, some other kind of like tax or something. Yeah, it was tax. So then it was like you're coming out on like a 1% return a year. And they were going to firms to try to get younger people to invest.
Right.
That's a 1% return. So of course, what you're doing, like teaching younger people, getting them more involved, letting them understand market dynamics, is much a better. It's a better approach than just like I don't know, selling that dream. It's marketing. That was marketing. How do you compare 2008 to now?
So 2008 was a deflationary recession. All right, everybody was very worried about deflation, and that was why we saw TARP programs to save the banks, and we saw quantitative easing, aka money printing, and that was really to stave off a deflationary crash. And if you look at really all of the recessions that we've had since the 80s and 90s and the 2000s, they've all been deflationary recessions. What's different about 2022 is we're looking at an inflationary recession, and we haven't had one of those since the 1970s. That started in the early 70s. And the problem is, everybody who sort of was working in the industry in the 70s, they've all retired or moved on by now. And so people my vintage, I'm at least old enough to have worked with guys who were on the desk then, and I've learned from first-hand information. But a lot of the guys making the decisions now, they're sort of reading about it in textbooks, and it's a very different environment from what we've seen in the last 40 years.
What's your perspective on quantitative easing and monetary policy? Like from an economics perspective, like what's your thoughts on that approach towards stimulating an environment or stimulating an economy?
Look, I think when you're in a position of authority, like you're a central bank governor, central bank chair, you're going to do everything you can to avoid a complete economic collapse, which is what we were, I think, looking at in 2008. You know, if we had seen a complete failure of the banking system, goodness knows what would have happened globally. Life could look very different. But it was certainly a scary time. And I think it's hard to be too critical of what they did at the time. But I think they kept the medicine going on for far too long. They really did try to almost get rid of the business cycle and prevent recessions. And the Fed has been broadly criticised in more recent years for really bailing out the S&P 500 rather than doing what they need to do in the economy. And I think to an extent that criticism has some justification. Yeah. So I think the medicine was probably appropriate for the time, but they should have taken the patient off the drip years ago instead of pumping him full of more and more quantitative easing.
Do you think there's an alternative to all of this? Like, would you ever think that there's a different economic model that could potentially work? Like because let's just look at the data. So like 2008, the 90s, another crash or whatever, the 70s, and of course going all the way back to the Great Recession of, was it 27 or whatever? Like, do you think that there's a case for an alternative?
You mean like a gold standard?
Like a gold standard, yeah.
I don't think so, in my opinion. I think that would be a very, very deflationary outcome. I think it would be very difficult to implement. And I think it would mean, a lot of hardship for a lot of people. It'd be a very, very painful transition.
Why would that be?
Because your ability to create credit is kind of what fuels economic growth. So when somebody goes to a bank to borrow a bunch of money, you put 20% down for a house, you put $20,000 down, the bank lends you another $80,000, you can go and buy your $100,000 house or your business or whatever. That is real, like money printing, really, the fractional reserve banking system. And all of that, I think, becomes a big question mark over how all of that would work under a gold standard. And you might just find that expansion, economic growth, business growth, all of that would become much, much, much slower.
Yeah, because one of the theories under the gold standards, well, mainly under Austrian economics, is the fact that supply and demand is determined at the margin. So it's not determined by, like, let's say, government intervention that we need to stimulate growth at 2%, or whatever it is, or have inflation at 2%. It's more that rational humans or irrational will determine supply and demand. So yeah, that makes a lot of sense. You're saying from a credit perspective, that wouldn't happen in that scenario then.
It's a little bit beyond my imagination. That's all I'd say. I think it's not something I've spent a lot of time thinking through. Mm-hmm. Look, I think the central bank, the Fed in particular in 2008, they did what they had to do, and I find it hard to be too critical of them. But my main criticism was just the degree of stimulus still being offered, especially last year, right, when there was fiscal stimulus coming down the pike as well.
Yeah, it's just interesting. It's an interesting conversation to see, like, is there any way that something could be done that's different? Because obviously what's happened and what's resulted, it's like a common occurrence, Mm-hmm. So you were speaking there about how this is inflationary, and in the 70s it was inflationary, and as opposed to that, it was deflationary in 2008. Generally, what are the timelines you're looking at here? Because, like, let's say if we do go into a prolonged recession, how long would that generally take?
Well, it's a great question. Now, if you look at the 70s experience, what happened in the 70s was the Fed had a real sort of stop-start approach to hiking interest rates. They would hike rates, economic activity would fall off a cliff, the stock market would fall, and then they'd start easing again, and then inflation would take off, and then they'd start hiking rates again, and then
slow down.
Yeah, but what happened was between 1970 and 1981, there was 4 recessions and kind of 3 major peaks in inflation. And what it resulted in was a decade or decade plus of heightened economic volatility, a lot of stock market volatility. Stock market didn't really go anywhere, just lots of peaks and troughs. Mm-hmm. And I think that if the Fed blink, if they get scared and start easing before they've kind of crushed the inflation bogey, we could be looking at a similar period of high economic volatility. Now, so far, the Fed, the chair, and all of the Fed governors who've been speaking to the press seem to be making a pretty united front on the idea that they're not going to take a stop-start approach. They've learnt from the era of the 70s, and that taming inflation is the priority. So if they do that and they really keep their foot on the gas in terms of tightening monetary policy, I think they potentially could get inflation under control. Whether that takes 12 months, 24 months remains to be seen. But we'll probably have a pretty sharp recession as a result of that. But that's probably just the medicine that we need to take at this point. I don't think a recession is avoidable. But if they do start to loosen at the first signs of rising unemployment, or if the S&P falls any further, then I think inflation will quite potentially flare up again. And we could be in for a decade of high economic and stock market volatility.
And what would happen in that scenario? So let's say a recession does hit. What is the first thing that's going to be affected? Will it be individuals' jobs, employment?
Yeah, I mean, I think we're already starting to see the cracks appear in the housing market. So asking prices are dropping, inventory has soared. I think that obviously the jobs market will be affected. We're already reading about big tech hiring freezes right across the place.
Seen a lot of those going on.
Yeah, so that's kind of already starting to happen. I mean, and what is really screwy about this cycle is that we're in a technical recession, but with effectively full employment. And that is unusual. That is a unique feature about this cycle. And that is really messing with people's heads.
That's interesting, because it's kind of like it's not happening to a degree. We're seeing the inflation effects where prices are really high and whatnot, but at the employment level, we're not seeing too much appear yet. But I suppose that happens really quickly. It just will rapidly fall off. I always think about that whenever I hear people like saying that, like building wealth or doing anything takes a very long period of time, but to go broke happens very quickly. It
does,
So looking at that, you just mentioned a lot about volatility. Where does the opportunity lie for you? You mentioned trading. Like, how does that work in this scenario? Like, why is that the opportunity here?
Because when you trade, and I should preface this by saying I specialize in trading options. All right. When you trade options, you can trade rises and falls in the market, and you can do so in a very risk managed manner. Options enable you to trade in such a way that your maximum downside is always limited. And I employ risk management over and above the amount of option premium that I've paid. But it's just that ability to capitalize on both the upswings and the downswings in the market. You employ a buy and hold strategy, and you're kind of sitting there hoping and praying the market rises every day, crossing your fingers and toes, hoping it doesn't fall another 3, 4, 5%. Because when it does, it has a very negative wealth effect.
Yeah, and it's more the fact that you're just putting something in like a slot machine and just hoping over the next 10 years it's gonna work out. I suppose like when you're trading, you have much more control over what's happening.
Yeah.
You have much more principles, and you can at least apply something that's going to generate wealth in the short term. Because like for people that you work with, or people that you that are in your course and academy, what type of people would they be? Would they be older? Would they be younger?
That's a good question. It's a really, really broad range. So I've got people in my programs who are ex-finance industry professionals, people like me. I've got yoga instructors.
Lisa over here is she's like yoga.
I've got engineers, I've got school teachers, and we've got people from over 34 countries around the world now. So it really is a very diverse community.
How does that compare then to 2008? Because I suppose back then, as you mentioned, finance professionals were keeping a closed guard, like a walled gate. You didn't have maybe the opportunities to do it. Does that make sense? Now you can just get onto any platform or whatever.
Well, it's much easier now to open a brokerage account. Brokerage rates have basically converged towards zero. So it is very easy to get involved. The point I'd make though, like nobody makes you get a license to open an options trading account. But opening an options trading account without getting a proper education, it's a bit like throwing the keys of a paddle shift Ferrari to a 16-year-old and saying, hey, go, take this for a spin. And, they'll probably have a bit of fun.
Yeah.
And they might make it through a couple of traffic lights, but eventually probably it's going to end in misery. And I think the same is true if you're trying to trade options without first learning how to do it properly.
It's like anything though, and it's just the fact that you're putting capital on the line a lot of times, and options is incredibly complicated to begin with. Not obviously when you're learning, but I'm saying like if you just looked at it from the outset, if you go onto this platform and you're looking put call options, you're obviously not going to understand a thing, So I
Yeah.
suppose other platforms like Robinhood was obviously pushing that on every user because they're making so much on overnight fees or whatever it is. But you obviously need to learn a skill. So from a skills perspective, like how do you approach this? So you have a bit of extra time on your hands, you want to make a bit of cash, you want to go do something that's different. How do you practically kind of go about this?
Well, I mean, I would say the best place to start is my book, The Tao of Trading. I've received some lovely feedback from people who've bought it and read it, and many people have told me they've read it within a weekend. And I wrote the book for a specific reason. It's not because the world needed another options trading book. There are already hundreds, if not thousands, of those out there. So why did I write this book? I wrote it because all of the other options trading books are difficult and they're kind of dull. They're kind of boring. I wanted to write a book on options trading that was both engaging and simple. And I think I succeeded.
Yeah, and I suppose it is a long process as well. Usually for people, if you can minimize it into just one book, it's like not necessarily like a worksheet, but you can pretty much go through the 300 or 400 pages and get to a stage whereby you can, I don't know, get onto an account and be able to actually like engage.
You'll know what everything looks like on the account, and you'll understand what it all does. And for the cost of $9, people get to download my 25 years of experience.
Exactly. How long would you think that kind of ramp up period would take? I know obviously it's a very individual basis and whatnot, but from someone to go from like zero to being able to move up and go do something, like how long does that generally take to work?
Well, working with people in my options academy, I mean, it's a little bit like asking how long is a piece of string, because everybody's different. Some people go through the material in a weekend. That's a gung-ho effort. Some people take a few weeks. Some people take 6 weeks to go through it all. But I would say on average, after about 2 months, people are starting to see some positive results. And then after about 6 months, people are starting to see some consistency. So it's not get rich quick. It's not get rich overnight. And it's not, it's not passive income. It does require some time and effort. But the reward for effort is superb.
Definitely. What would you say some of the expectations versus reality are with some things like this when people get into it and they're like getting on this platform and they're trying to learn, or they're trying to learn like your course and whatnot? Like, what is it they think that's going to happen versus what actually happens?
I don't like talking about returns because people have such vastly differing expectations. But what I say to my members is, once you've got your first 100 trades under your belt and you've got the processes grooved, you should be aiming for 5% per month. Now, some people will listen to that and go, that's not possible. Not even the best hedge funds in the world can do that. That's rubbish. It's impossible. And they just shut off. Other people will look at that and think, well, no, if I'm not doubling my money every week, what's the point? So the divergence in expectations is enormous. But I've found that 5% per month, it's a realistic goal that people can achieve without taking stupid risk. With the methods that I teach.
How does that work in a dollar value? So if you start off with 5K, like how does that 5% actually compound?
Well, if you compound it monthly, by the end of year one, you're up to about $8,500, and by the end of year two, you're at about $15,500. So you've trebled your initial account within 2 years. That's going to take you 7.5 years if you're earning 10% per annum.
But what's interesting there is it's not even about the investing perspective. Like I think, because like trading is pretty much like it's entrepreneurial. It is that it's doing something that's quite entrepreneurial to create wealth. That's what entrepreneurship is. And I always think that like how difficult it is to start something, like no matter what it is, that if you were to put your mind into this where you're just looking at number and you're trying to improve the number and you're looking at returns, it's as profitable, or if it's more profitable than going to start a different business. Sometimes I always think about that. There's less bullshit involved with suppliers and whatnot. It's just headaches. Like view charts analysis and making sure then that you're managing your risk or whatever.
But I mean, there's a lot of ways to think about how trading can fit into your life. And the thing is, man, like most people have got some financial stress, all right? And living with financial stress, it's like driving a car with a handbrake on. It really dulls the experience. It dulls the experience of life. You don't get into the fast lane. You don't get to explore everything that life has to offer. And, the fact is, man, life is short. Life is so short. We've got such a small amount of time on this earth to try and figure out this maze called life. And what the vast majority of us just end up doing is just trying to figure out how to manage our anxiety. And so my philosophy is, well, what if I can help you with the financial stress? What if I can help ease financial stress in your life? Now, I realize there's a lot more to living an abundant life than just money, but if you can get your financial stress sorted, it can point you in the right direction. It can help you to leave a bigger version of yourself in your life. And you're talking about setting up a business. If you've got a side income from trading that has become consistent, maybe that then gives you the guts to quit a day job that you hate and employ and chase something that's more entrepreneurial. It can be a really nice bridge.
And the thing is this, is that there's so many people that are living the same life and they're doing the same thing. And this must be come from a university perspective or as we grow up, that it's like mean aversion. It's going back to do the same stuff as everyone else. I think it's the worst place to be in, because then you're not going to get the returns you want, financial, relationships, experiences, if you're just doing the same as other people. And as you said, get your ducks in a row with your finances and work on that. But then you get the more opportunity to go do different things, like me being here. If it wasn't by Revolut, my company that I do enjoy working at, giving me the opportunity to come here and me pushing myself and having different things, I wouldn't be able to open and have these experiences. So I think that's the challenge, is that people would look at that and think, trading's risky. It's a big undertaking. I don't want to lose money. There's loss aversion. They don't want to lose, any part of their first initial trades. But it's kind of like, if you're to zoom out of the closed-minded of maybe your hometown, maybe your close friends, well, then this is the opportunity.
I think it's a good perspective, actually. And it's all about having a fixed mindset versus a growth mindset.
I don't know. It's interesting because I'm even looking at things like that I'm doing at the moment, like investing in my podcast, trying to grow it more, putting a lot of money into it. Sometimes you're like, oh, is it ever going to work out? But I actually said this recently, being like, if I don't do it and if I don't try it, then it's never going to, actually manifest and come true. It's never going to do it. What's your kind of process like for trading? Like, what's your daily routine? Like, where do you sit within that, especially around your kind of like visualization of it?
Great question. So I have a bunch of scans built that are based on the trading criteria that I look for. So I'll run those scans in the morning, and that takes 2 minutes, and that will give me a short list of stocks that I then need to go and do some research on,
like a stock screener.
Yeah, but the beauty of these scans is I don't have to sort through hundreds of charts every day. It might only be half a dozen, might only be 2. Some days it might be 40. It just really depends on market conditions. But it's an enormous time saver. And then it's just a case of going through what I call my weeding out process and trying to sort out the highest probability trading setups from ones that are looking a bit average. But the scans provide a really good starting point, and they greatly narrow the amount of work that I have to do. And what I say to people is, again, once you've got these methods grooved, you should be able to get your trading done in about 20 minutes a day on average.
Yeah, and you're not the first person to say that as well. A lot of people who are dialed in and have their understanding of, this is what I'm trying to do and this is what I'm not trying to do. Like that's a very, I don't know, it's a very realistic approach to get to. That's probably maybe the North Star or whatever, What have you, well, before I ask you about what have you learned, I kind of want to ask about mentally, how do you prepare for this? Like do you do a lot of visualization? Do you do a lot of documenting? What do you do that you learn from trading?
I do both. So I do journaling. I keep a gratitude journal, things like that. Visualization is good for the big picture. It's good for the macro. It's good for where do I want my life to be in 1 year, 2 years, 5 years. no amount of visualization is going to get you out of a bad trade. So I want to make that very clear. So yeah, visualization is great for the macro, but it's not going to help you trading sort of day to day. I keep a trading diary. I keep a trading log. So I keep a log of why I went into every trade, why I came out of every trade, my emotional state on the entry and the exit. And the other thing I do is I print all of my charts out. So every time I take a position, I print the chart out and I scribble on it. And I actually, that's how I keep my trading diary. I write on the charts.
You must have a massive like booklet of everything you've done.
I have a pile of winners and fortunately a much smaller pile of losers.
Nice.
But you learn a lot from that because when you look through the charts of your previous winners, your brain just starts to see patterns that are pretty hard to describe. And you can look at a chart and think, yeah, that just looks like a winning trade to me because it looks like 50 other winning trades that I've taken.
Yeah, and there's so much life lessons in that. Like I was mentioning previously that I feel like a lot of the high stress environments I put myself through, whether it's with my job, whether it's with my podcast, whether it's with other things, or uncomfortable positions I've put in, I've found myself like improving in other aspects of life. Do you see that in trading whereby like, applying risk management, being calm and cool and collected and documenting your process? Do you feel that has influenced your life?
Yeah, I mean, it's something that you never stop learning in. And it's one of the things I love about trading and financial markets is you're always learning and you're always just days away from another humbling experience. As soon as you think you've got it sussed, the market's going to kick you in the butt. I joke with my members, I've got a no high fives rule. As soon as you feel like high-fiving yourself about what an amazing trader you are, it's time to just sell everything. Just go flat.
Very, very good life lesson, man. I even think the exact same. If I'm bringing on new clients or if I'm working with people who are signing like big deals, the first thing you should be doing is like going again, like going back through your backlog, going back through like the, your list of clients or whatever, and just trying to, in that moment of like, adrenaline and joy and whatnot, to do the next step, because it's very easy, I suppose, to get complacent and be like, okay, well, I'm grand, I'm fine, I've made $1,000 or made $2,000. It's interesting.
Complacency will kill you. Yeah, you've always got to remain vigilant.
And that's what's kind of interesting about trading is the fact that when you've been doing it for so many years and you're saying you're learning so much, I see so many people in different domains getting lazy. I see like lazy podcasters, I see lazy people starting businesses, lazy content creators. But in trading, there's no second chance with that stuff. I suppose you're always being reminded of like trying to stay on top of it and stay sharp.
Yeah, you get lazy and your account falls in value. So you get a very, very swift reminder. But what you learn more than anything in trading is more and more about yourself and how you respond.
Yeah, I can tell that about you as well. Like, as in, you're a very calm and relaxed guy. You did a lot of MMA. Was it MMA? No, well, martial arts anyway.
Martial arts, yeah.
Yeah, but like you can tell that even in your personality, like well spoken, like clued in mentally. Like that's obviously like paid a test because you keep that level of kind of intensity, I suppose, just in terms of like you stay kind of mentally sharp, you stay in check with that, and it's kind of the I wouldn't say the heaven and hell analogy. I would just kind of say chaos and order more so. The fact that like your trading would have to be in order, but there's also an element of chaos to it, which you are probably leveling out, and that's a huge testament to people's lives in general, where you, as you mentioned, about doing that kind of growth phase of trying something new.
And it's a good analogy. Trading is chaotic, markets are chaotic, but life is chaotic, right? It really is. And so if you can navigate through that chaos without getting upset, life gets a whole lot easier.
You spoke about like abundant life. What, in addition to kind of trading, adds, or like the financial element, sorry. So what, in addition to like the financial element of an abundant life, would you kind of categorize?
I guess to me, abundance it's having time to, being able to decide how you allocate your time. So whether it's spending time with your family, whether it's giving back to your community, whether it's working for a cause that you feel passionate about, these are all things that will add to the abundance of your existence. Whether it's just doing random acts of kindness for strangers, whatever it is that lifts you above and beyond. So that, there's certainly more to it than money, but money can certainly help provide the freedom and the time necessary.
Mm. I think that's what people chase so young as well, because I suppose they're not open to it. I think that's the best approach. I know people hate Andrew Tate, but he said something that was, you know Andrew Tate, yeah?
Yeah.
He said something really interesting the other day. It was about like, people who are born into money, that everything becomes just like nothing to them. Like they get the Lambos, they get the girls, they get whatever they want, and then at that point they don't get any of that actual benefit from it. It was very interesting. He said he was like, he came from like literally nothing, so having that appreciation that now like his finances are in order, and now he's doing other stuff and his health is in order. I thought it was very interesting, because it's like when you go from zero, which is what we kind of do with our health when we grow up, you're kind of continuously getting it better. Same with your finances, and then it's like you get that appreciation for it. And then at that point, then you can start doing the other stuff. And that's kind of the self-actualization, like the Maslow's hierarchy of needs, is that once we get the roof over our head, once we get our food in order, our job in order, our money in order, then we can start doing other things.
Yeah.
And you start investing in it, investing in causes that we think that are important. It's a weird dilemma, because I think for the younger person, especially people that work in finance, consulting, technology, they're not thinking about that earlier on. It's all about how can I acquire wealth as fast as possible.
Yeah, it's a good point. And I think that's a fairly natural human state to be in, especially when you're young, because, there's a lot of anxiety about the future. How am I going to do this? How am I going to do that? How am I going to afford
Form of security, I suppose. It is that form of security. So when you look at a successful trader that comes to your academy, what are usually the personality traits you would see of someone?
persistence? Just the ability to sit there and do the job and just be consistent, show up every day. It's nothing in trading is particularly difficult, or even that time consuming. It's consistency that will win the day. Showing up every day, going through your routine, going through your checklists, keeping your diary. And if you do all of that, you almost can't not win in the end, because the probabilities are in your favor.
And it's also the probability is going to increase as you stick with it.
Yeah.
That's true of everything, though, isn't it? Like, people that stick with it over the long run are obviously going to be successful. There's always going to start off with 100 people, you end up 50 people, end up with 30 people, end up with 10 people. But how does that work from a trading perspective if it's capital requirement? Let's say you need cash or you're trying to make money. Do you see people kind of fall off and be inconsistent when they're like, oh, I'm just going to go back to my day job or go back and do something else?
Yeah, look, I mean, that can certainly happen. I think the worst thing that can happen is somebody loses their trading account, through trading losses. So risk management is something that I really drill home.
Like a margin call or some shit. And
yeah, or just you get in a bad trading rut. What'll happen? Somebody might have 3 or 4 losing trades in a row, which can absolutely happen, right? We're dealing with probabilities here, but their mental game goes to shit as a result of that, and they start trying to trade their way out of it. They start trading more aggressive. They start taking bigger risks, bigger positions to try and make the money back, and they end up in a very nasty downward vicious cycle. What I say to people is, if you find yourself in that sort of psychological hole, take a break. Just go flat. Just walk away from your desk for 48 hours and just regroup. Now, I've got specific risk management rules in the program that should prevent you from ever getting there. But if you've been a little bit slack on your risk management, it can happen.
Would you say there's some of the kind of biggest bottlenecks people kind of run into, as in terms of like they can't, or like they get to a certain level and then they want to push on and make maybe 6 or 7% a month, and then they find themselves in these kind of hairy positions?
Yeah, I mean, there's a famous saying, you can't make a living in the theater, but you can make a killing. All right. And it's in, I forget whose quote that was, but it's in reference to the fact that there are millions of starving actors out there, and then you've got a few superstars, right? Now, the thing about trading is that you can make a living trading, but you can also make a killing. The thing is, people, particularly newer traders, they get into this business with the idea of, oh, I want to make a killing. That they approach trading with this sort of, it's almost like a lotto ticket mentality of, I want to, turn my $1,000 into $1 million by the end of the year. And if you approach trading with that sort of attitude, it's almost certainly going to end in tears. if you treat trading like a proper job, a proper job, right? You show up every day and you do a good job, you're going to get paid at the end of the month. Same goes for trading. If you show up every day and you do a pretty reasonable job, you're going to get paid at the end of the month. And that's how I think people should treat it.
That's how people should treat life. I think there's a real issue with people trying to be like the best at something. You're like, I want it's a broken fallacy. It's like, I want to be the best trader, the biggest YouTuber, the biggest content creator because someone else is doing it. But like, you don't need it. And the reason why I'm saying you don't need it is because you can make, I don't know, 5K a month or whatever it is from trading, and be part of the bulge bracket, who are not on the bottom end, who blow their brokerage account, not on the top end, who make, I don't know, 30K a month or whatever, but you sit in the middle, you're making a lot of money from it, you're very happy with it, and you can try maybe put a bit more time into it, whatever. And it's the same with everything else, man. I think there's overemphasis of people trying to, put too much pressure on themselves in the short term to be the best at something. And it's a comparative effect. People look around and they're seeing other guys that are doing it, and I don't know. It's something that I'm very cognizant of myself, that I'm like, I saw this guy the other day. It was on YouTube. His name is like Elliot Toll. He was on Danny Miranda's podcast. A guy you should actually definitely go on his show. And he reached like 1 million subscribers. And I was thinking in my head, and like, obviously the guy's making like so much money. And I was thinking, I was like, that would be great. But then I was thinking, like, why would it be great though? Is it only great because you get a gold platinum trophy that you put up behind all your videos? Or is it great because you make so much money from it? Or is it great because hardly no one does it? And it was like a weird thing that was going on in my head, and I was like, I don't necessarily know, do I want to be the best at something sometimes, you know what I mean? Like the number one.
Yeah.
Because there's so much benefit to come underneath, Like, you can still get loads of great deals, your house will be paid off, your family will retire well and whatnot. It's a weird thing that goes on in my head lately, because like I am obviously incredibly ambitious and really like hungry for success, but sometimes I'm like, maybe like looking at to be the best or something is not like the best to manage my like anxiety and fear of not getting there.
People always say that they want more. They always say that, they want more money or more success or more seniority, without necessarily thinking about what more entails, whether it's more work, more stress, more health problems, more hours away from the family, more difficult customers, more difficult targets to meet. There's always a trade-off. Right? If you want more of something good, there's always something you got to do to get there.
Mm-hmm. It's weird. I've actually been doing something quite interesting recently. I spoke to someone who recommended it to me about like practicing minimalism, and I felt that like as my life kind of got a bit more intense recently, like because as I mentioned to you, I was like, I'd love to get into trading, but I was like, Jesus, where would I pull from? Where would I pull from? Like, what jar would I pull from? And I was thinking in my head, I was like, I've been recently adding so much stuff into my life that I have like no time left. Like, me and Elise might not be able to go for food at the weekend, or I might be grumpy and pissed off half the time. And as opposed to it, I just started having that like saying no mentality to everything. So it's literally doing nothing that isn't either income producing activities or value producing activities. I use the word value because value to me could be health, it could be relaxation, it could be working on like maybe like a kind of passion project or something kind of different. Like I'm learning a language, let's say at the moment. So it's kind of doing something that's kind of different like that, and only sitting within those things. So really what I've got rid of is social media. Now that's not to say that I'm not on it, but I guess would deliberately try to cut myself from it.
You're not doom scrolling. Exactly.
Because this is the way I was saying was that like, if you do want to kill in your 20s especially, you don't want to be part of the 99%. The 99% are doing things like that. Mm-hmm. If you want to be part of the 1%, and not because of not giving up what I was saying earlier, but if you want to just do something that's slightly different, you do have to make those sacrifices. So one was kind of giving up social media, like that stupid like emphasis on it. Secondly then was obviously like, food and diet, just making sure all that kind of stuff was in check. But I don't know, it was just like having a very minimal approach, even bullshit conversations, just having conversations with people that were like mindless. And I just, sometimes I just find myself in these positions and I'm like, the guys who are killing it are not doing this. Does that make sense? It was like when I said to you recently, like open up a bank account. I was like, the guys that are killing it are not just sitting in a bank for like 3 hours. Does that make sense? I don't know. It's a weird thing that I'm thinking about recently.
I think it's a great focus to have because Just as an example, I remember when I was like building my trading systems. This is back when I was still in the industry, and I'd spend night after night on my Bloomberg Anywhere terminal back testing and what have you. And all of my mates were playing, Call of Duty online. and I've never really been a gamer, because anytime I've played a video game, I felt guilty. I felt like I could have done almost anything and it would have been better use of my time. But yeah, it just gets back to your point, having that focus about how do I want to spend my very, very limited amount of time on Earth.
And it's weird because like being Irish, we're like big drinkers, big like partiers, and I see a lot of people who have their mid-20 habits falling into their late 20s. Like I'm 26, but a lot of people I know will be 27, 28. And I'm kind of like, I just don't know where the best people doing this, like are they out? And like there's nothing wrong with having a drink and whatever. But just, I don't know. I'm having a lot of kind of like weird, like kind of with thoughts recently, especially moving to Singapore. Like I just see like some amazing people here, some like proper killers and just like really guys that are like kind of have their shit together and stuff. I'm like, maybe they weren't doing the stupid stuff that I was doing in my early 20s, that I'm doing in my mid 20s, or now I'm trying to like maybe align a bit better. It's a weird thing now. I remember I've often said to Elise as well, being like, I wonder, should I just give up drink for like 6 months and see what happens? And then I'm like, well, I'd still like to just like, I'm going to the Philippines in a few weeks, just like sit on the beach and just drink a beer, whatever. But at the same time, I'm like, I don't know, it's something I'm just playing with, I'm toying with, but I feel like that even just the thinking of it, the exploration of my current habits maybe not being the most optimal habits, whether it's in trading, whether it's building a business, whether it's in my career, is a way to improve your current situation.
I think it's all about finding stuff that you can do long term that doesn't feel like an extraordinary effort. As an example, I mean, a few years ago, I tried a ketogenic diet and, it looked good, felt good, but I didn't enjoy the food. I don't enjoy fat. It's my least favorite food group by far.
Wrong diet for that.
I love carbs, and I just thought that this is just going to feel like there's no way for me it was going to be a long-term sustainable thing to do.
Yeah.
And so I think, I would I give up alcohol? Probably not, because for me personally, it's not something that I would find is long-term sustainable. I'm not a big drinker, but I don't mind a glass of red wine with a steak.
Yeah.
I don't mind a beer on a Friday night.
Yeah.
Nothing
you're dead
excessive, right. But yeah.
That's a good way to look at it, is like nothing in extreme kind of like, or like nothing that's that you can keep up for the long term. I think that's what is interesting about bodybuilding, is the fact that what we often do is like we go through these cycling periods. So like we'll just restrict maybe like 8 to 12 weeks of dieting, whereby you're really just focused on that block, because doing that for the long run, is not sustainable. Messes with your tests, messes with your leptin levels, messes with your blood. So there's kind of things like that. So that's what I kind of get a lot of my kind of drive and focus from, like physical exercise, because then I can use that then into other areas. And that's where I got a lot of my kind of discipline from, or where I try to stay disciplined from. And that's why I was trying to ask you about personality traits of trading, because, sometimes it's usually people who are disciplined, consistent, and pervasive in certain circumstances will only succeed in certain things,
Consistency is a superpower, man, in my opinion. Yeah.
So moving kind of more into like the kind of online business space. So, I love a lot of stuff you do, and I think what you do is awesome. And it's, you're a huge mentor to me, and I think a lot of stuff you've done is a big kind of like inspiration for the way I kind of like align like my life and kind of how I focus. But I think it's really cool to see how like you moved into like being completely entrepreneurial, and that's very strange from a finance professional of your caliber and maybe of your experience and whatnot. How important do you think that has been for you now, since like as the times have come and recession has hit and whatnot? How important is that?
It's sort of been I guess almost a calling, really. I spent 25 odd years in the finance industry, and when I look back on my time there, I mean, I had some great memories and great experiences and learnt a lot. But ultimately, my marginal contribution to society was basically nothing, because all I did was help people who were already extraordinarily wealthy stay that way at the end of the day. And so I thought, well, look, I've built a skill set here, and what I want to do is use that skill set to help people who could really benefit from it. People who are still trying to get up the first couple of rungs of the wealth ladder. And so I've derived a tremendous amount of, I guess, satisfaction out of doing that. I've always loved teaching, and this was something that I guess it really hit me like a brick when a few years ago I was learning to kite surf, and I was having like my second kite surfing lesson. I'm a terrible kite surfer, by the way, but I was thinking, how would I teach this to somebody? How would I explain this to somebody else? How would I teach someone to kite surf? And that thought process is something that I've always done whenever I've learned anything, you know, whether it's doing triathlons or you know, or whatever pursuit. I've always been very keen in how would I break this down and explain it to somebody else. And of course, trading's something that I've done for so long, it pretty much is second nature to me. And there's nothing more rewarding than when the penny drops and the light bulb goes on and they just get it. It is just such a satisfying experience for me.
That's interesting. It's cool because, like, I suppose, you know, you would have done so much time and energy to build other people's wealth, put all that energy into it, and now you're switching that kind of focus and doing it. Was it difficult for you to make that kind of transition, especially teaching people, like, as in, you know, what software to use, where to look, and how to market yourself?
No, I don't think it was. I think it was something that I just really passionately wanted to do it. And you know, it was all up here. It was all I had to do was get it down on, you know, onto paper and into videos. And, you know, that was a long process. Well, same as writing the book. It was a long process, but, the feedback's been wonderful, you know, so I've got zero regrets, and I'm really enjoying it and really looking forward to the future.
Mm-hmm. What have you've learned from, like, building a platform? Like, how challenging was it, or what was it like? Sorry, when you're getting on and making these videos and whatnot.
I mean, it's hard work. Like it's hundreds of hours of work to do it all, and so that requires showing up every day and consistency and all of the things that we've talked about. And then there's, you know, finding out just the business stuff. Where do I host them? How do I host them? How do I give people access? How do I let people know I exist in the world? All of these kinds of things. But it's a journey, and it's exciting and it's interesting, and you learn, and yeah.
It's the operations of it as well that's usually the most challenging. Like, you know, how do you integrate your videos, and how do you get them to be seen by many people, and how do you do webinars and whatnot, you know? What would you kind of encourage younger people who are trying to start maybe like a service-based business like yourself now at the moment? Like, do you think that this is the best time? Do you think there's a good opportunity for it?
I think it's a wonderful time because the barriers to entry are really, really low. It's a fairly low cost business to get into. I mean, you can start up a business really for a few $100s these days. And then it's just your biggest challenge is going to be letting people know you exist. Social media can be very useful for that. I found it very useful, and as I know you have as well. But that I think is one of the big challenges. And I was having dinner with some friends of mine a few weeks ago, and we were talking about, you know, what are going to be the big industries of the future. And, you know, we had a few ideas around, and one mate of mine said it's going to be electrical engineers, because as power grids transition from coal-fired and gas to renewable, we're going to need lots and lots of electrical engineers. And another guy said, no, it's going to be chemical engineers, battery technology is the future. And I said, actually, you know what? I think it's going to be marketing professionals, because more and more people are going to become solopreneurs or entrepreneurs, go into business for themselves, and they've got to let people know that they exist. And that's where good marketing people come in.
Man, 100%. I was just about to say that. I was like, the biggest challenge, like, because like for me, like, so I do coaching for young people who are moving through different career transitions and whatnot. It's a great time because people are wanting to get out of their roles, or they may be not particularly happy, or they may lose their job. So a lot of people come to me, as I mentioned to you before, because they find a bit of a familiarity. People know me from my podcast. They know what I'm like. So hopefully I'm not too much of a bullshitter. And then even on the services side, so with podcasting, like, I just got a lot of interest in it, so I can just help other people. But for me, it was keeping the varied content of how do I produce this and get my message across in multiple ways, not making it monotonous, not making it repeatable or whatnot, because I don't have the reach that some other people get, like the Justin Welches, whatnot. You know, those guys get like 10,000 likes on a photo or whatever. So it's about making that kind of varied approach. And I'm working as an advisor on a startup at the moment. And the biggest problem that we're trying to solve is how does he keep content consistent for a brand? Because branding is so difficult, especially for brands, because they're boring.
Yeah.
And this is like an online e-learning platform. Great company, 100% back it. But it's so interesting because who did we hire? Someone from Fiverr who's a marketer, who was a complete specialist that does end to end like this type of stuff. And I thought it was very, very interesting because it's like, Jesus, like, back in the day, you'd say marketing, like, what is it? It's a few ads, Coca-Cola ads, Coca-Cola Christmas ad. But now it plays such a big power through your business. But what's actually even more interesting there is the fact that I'm always very hesitant to advise people to outsource their marketing, because the story comes with the individual and with the person's experience. And Andrew Gazecki from Microacquire, he is huge on this. So his whole thing is that, like, you outsource operations, like you were saying, you outsource your legal, your product, everything, but you keep the marketing towards the founder because it's their story. It's your narrative that, you have helped wealthy professionals and now you're helping the ordinary person. That is the story. And that is what sells and what's actually humble and what's actually very relatable. And you can see small brands getting killed on that because they're not putting that emphasis on it.
Yeah, right.
And I say people are sick fucking to death of seeing me show up everywhere, but I think that's what's let me kind of put the foot down this year. And I think for me, year one was build, make sure everything was just like, like actually existing. And then year two for me then was kind of monetization, because I wanted to set off a lot of the losses that I made in the first year. And then year three then should be just scale. So maybe it's a combination of bringing in a marketing professional or whatever, but I think you need to have those pillars in place first.
I think you're right. I think the content, you're right, it's got to come from the founder. But where a marketing person can help is just, what platforms should you be on? How should you disseminate it? Is it video? Is it graphics? Or, all that sort of stuff that I know very little about.
True. And I think you develop it over time. Like, as you mentioned, like, I have a new video editor who's doing great work. Like, I was looking at it the other day and some of the clips are doing like 10 times better than I would ever do.
Oh, wow.
And it's like, why didn't I just do this earlier? And it's like, you didn't do it earlier because you didn't have the capital earlier, because you were figuring things out, which is fine, So you come to those kind of states where you're like, well, now it's time. It's kind of like this. You could have sat at home in your apartment. I could have sat in my home in my apartment. We could have recorded. But I came here and I was like, this for me is what will do it or what won't do it. It's putting in that time and making that commitment and making even the personal equipment and the personal investment, should I say.
This is way more fun. This is really cool stuff.
Oh, of course, but it's so much more enjoyable though, isn't it?
That's great.
You can fly through time, and maybe this is the reason why Joe Rogan does 4-hour podcasts, because you can do it, something like this. So I think basically just kind of wrap up on this point is to say that I think a lot of people think that they can't go and do something, like especially service-based, but I think this is the best time. People need people to help them out to either save money, grow revenue, or reduce time. That's kind of the main kind of points. What would you kind of think about people taking kind of risk at this time? So maybe starting different businesses. So obviously when you started yours, it was a bit expensive or whatever to get going. How would you approach that right now from like a risk perspective?
Well, I think if you've got a side hustle or a passion project, just spend as much time as you can on it. I mean, walking away from a paycheck is hard, right?
Yeah.
And what I've found with several of my members is that the trading has actually provided that bridge so that they can earn an income trading in a very time efficient manner. That it just makes walking away from that paycheck that bit easier. It may not replace the paycheck, but it still keeps a roof over your head while you're getting your entrepreneurial venture up and running. Yeah,
it takes a bit of time. But I think what's good here is that, so obviously this whole kind of topic is around like beating a recession and whatnot. A lot of the stuff that I'm researching on is all about kind of building cash flow, because you may want to go and invest. And you spoke about the housing market actually, which I kind of want to ask you on too, is that, when you do build up that cash flow and build up capital, maybe that's when you go start looking at different opportunities. And that's kind of exactly what I'm doing. I'm going to be completely transparent, is that I'm trying to build up as much cash flow as possible to invest in whether it's a combination of property or whether it's a combination of even crypto, like if there's a bull run in crypto, like what's wrong with getting into Bitcoin at the bottom of a bit of the bear market and then letting that run, whether you believe in it or not. That's kind of my thesis around this, is kind of stay like emotion out, build cash flow, and then look at potentially things like property and whatnot.
Well, you build the cash flow, and you've got options at that point.
Yeah, exactly.
Yeah.
And that's what cash gives you. It gives you options.
Yeah.
So you're speaking there about housing. How does housing work in a recession? Would it be kind of delayed and might start reducing in price? How would that work?
Well, what's happened? I mean, and focusing on the US here, but we've had the biggest percentage increase in mortgage rates ever. Consumer debt is at the highest level ever. The personal savings rate is at a 13-year low. So even though unemployment is quote unquote full and 3.6% unemployment, the consumer's not in great shape. All right, they're maxed out on their credit cards. Mortgage repayments are harder and harder to make, and it looks like rates are only going to keep climbing. Where property really starts to get affected is, of course, when job losses start to rise and that people can no longer make their mortgage repayments. And as you touched on earlier, price in any market is always determined by the marginal buyer and seller. And so if your marginal seller, if more marginal sellers suddenly start hitting the market because they can no longer make their mortgage repayments, it's going to depress property values.
So obviously there's two sides to that coin. Like that's obviously devastating for people who fall into those scenarios. But for someone who's on the other side of it, who's trying to do what we've been discussing, maybe that positions them in a good position, maybe 12 to 16 months from here, maybe they could be in a better position to start buying up assets.
Yeah, I mean, I don't think I'd be rushing to buy property today, but yeah, in another 12, 18 months' time, it could be well worth a look.
Yeah, I suppose it's the kind of fallout and then and the rebuild. Now, of course, you mentioned around the the 10-year strategy. If it was to get really shitty, we'd have those kind of pumps and kind of pullbacks. So I think it's kind of more on the emotional side, but then obviously being like having your finances in check as well.
Very important, because we don't know what the future is going to hold.
That's the whole opportunity though as well.
Yeah.
Think about it.
But I think if the Fed stick to their guns and they keep raising rates, yeah, we'll probably have a pretty sharp recession, but we could probably get through that fairly quickly. And recession, it's going to be really unpleasant for some people, but high inflation and high economic volatility is going to be really unpleasant for everyone.
I don't know how true this is, probably is, whatever, but I always hear that like people die in recessions. The death rate is increases, especially places like Africa or South America, whatever, because there's like a shortage of supplies. The wheat doesn't get there from Ukraine or whatever, and in those periods,
I mean, we've already seen that, haven't we, with a COVID lockdown. Now we've got a potential food crisis brewing. We've got unusually hot weather in sort of Western Europe and the US, and unusually cold weather in Russia, and it's a
shortage of supply to get the resources. What do you think about commodity markets and even in crypto markets? Just like, obviously not predicting it, but do you think that commodity prices are going to go kind of more crazy now, or do you think that things like crypto and stuff, if we hit a recession, we'll go to the like literal bottom and have to start rebuilding again?
I think in terms of commodity prices, I mean, they're all kind of trading a little bit differently. Oil is sort of still holding up just. Oil is kind of interesting at the moment because it looks like it could break higher or lower at some point in the near future. I think a lot of the other, like the soft commodities, the wheats and the soybeans, that they've kind of fallen out of bed really hard. They're probably due for another run at some point. In terms of crypto, I think crypto looks a lot like the stock market. It's in a long-term downtrend, short-term uptrend. So, Bitcoin will probably hit 25,000 in the coming weeks, but may not rally a lot more than that in the near term. I think there'll be better buying opportunities in the future.
True, but I think a lot of the the things that got their pump in 2020, 2021, like they could be long gone, over the course of the next 2 years.
I think a lot of these unprofitable tech stocks that really got pumped up during that time frame, yeah, they'll be like the pets.com of the 1999 era. A lot of them will never come back.
That's the fear, and especially like so tech stocks, of course. Like you'll have, I didn't even laugh. Like when Bumble went public last year, everyone was like, "Oh, Bumble's such an amazing company," and I was like, "It's a shit version of Tinder," and now people are buying it. It was crazy. And then, of course, that's been hit like so hard. Same with like Snap and stuff like this.
Yeah.
So of course that concept is like Monday morning quarterbacking, where it's like, well, of course it was going to go to like, very low, but it's kind of like you need to have a small bit of sense in those scenarios. And I'm kind of speaking about that as well in crypto sense, because we've had some tokens that obviously went mental and went manic, but they may not be the ones that run again next time. Because I do believe that I do believe that crypto has a space, but it may not be the space that we think of it at the moment, especially all these, altcoins and whatnot. I think that it's going to be ever evolving, just like 2018 is completely different than now, just like it was different in 2014.
Yeah, I think you're right. I think it would be foolish to ignore the crypto space, but very hard to predict what it's going to look like in even 5 years' time. Yeah.
If you took price out of crypto, it would be completely different. If there wasn't a price involved, you know what I mean? If it was like, this is just something that you can build applications on.
If it's just a technology.
It's just a technology, or it's just like a potential gold standard alternative that's digital that maybe maybe one day could work. People are like, oh, well, yeah, potentially that might work. It's funny, like, it's just the fact that there's price involved and there's kind of like bullshit on Twitter involved, of course, that's what makes people kind of think that, oh, it's not going to be hanging around.
Mm-hmm.
Interesting. Last area I want to chat around here is around just from a career perspective. Of course, kickoff sessions mainly focusing on careers. What would you advise someone in this scenario who's feeling a little bit more overwhelmed and kind of lost in their career right now? Because people are advising people to not move companies. This is what I hear often. People are like, you should stay in your company. How do you feel about
that? What would be the reason for that, for telling somebody to not move?
Because this is the hypothesis, is that it's like a risky move. If you moved, you could land badly. And if you land badly, then at that point, then because of the recession, you're first to go or whatever.
Well, the thing is, right, if there is a recession, how safe are you in any seat?
Yeah.
I would think if somebody's unhappy, worried, overwhelmed, take a leaf out of your book and look at generating multiple income streams. Look at doing something entrepreneurial.
Completely agree.
Take control of your own destiny. I mean, you'll only ever be an entry on a spreadsheet in a corporation.
Yeah, and that's the issue, is that one thing that I hate, like really hate, is when people say, I need more experience. And I've had a lot of close friends who have said that, they wanted to start blogs, they wanted to start even investing, or they wanted to even start like an investing blog or something like that. And they said, well, I need more experience. I need to finish my CFA. I need to finish this. And then at that point, I'll be ready to start something. But it's like, you apparently need experience to start, but the only way you can get experience is by starting.
Correct.
So if you just take that leap and go do something that's slightly different, do it in silence first. You don't need to get online and start pushing about it. Work really hard at something and then let that kind of improve. Well, then you don't need to wait for anything else. You don't need to wait for someone else's permission, because even where I am, if I ever wanted to try take this full time, which is literally like an uphill mountain, but it's not to say you can't do it. But unless you literally put the first foot forward, sure, none of it's possible.
Exactly.
And I often find that as well. A lot of people who want to start things and start podcasts and stuff, is that they're like, well, it's easy for you. You have 100 episodes. Well, as I said to you before when we were having food one day, that, there once was a time, and there still is a time, that when I message someone, people are like, who the fuck is this guy? So, it's sometimes it's very, very difficult, but it's the same with, if you're looking for investment or you're looking to build something, you need to take the kind of first step,
It's so true. And I mean, easy for you now that you got 100, or easier for you.
Easier slightly, yeah.
But yeah, you started from zero, same as everyone else.
Yeah. But it's funny because there's always that upper ceiling, and I often find that as well, actually, in the fitness industry, people are saying that they're always talking up. It could be similar in trading, that people want to talk up to the people above them, and they're trying to get onto that level where it's like, there's people beneath you. That's who you should be teaching and coaching and trying to improve, and that's what gets you ultimately to the higher positions. But
people shouldn't worry about things like that. That's just fulfilling the ego. It's like in martial arts. I want to become a black belt, and then you become a black belt, and you think, woohoo, I'm a black belt, and then you realize you're just a first dan, and there's hundreds of black belts higher than you. It's like in an investment bank. Oh, I want to make MD. I want to be a managing director, and you make MD, and you look around, you realize everyone's an MD and there's loads of MDs above you. You know, it's the wrong focus, I think.
Yeah, where do you think that's always been around? Because obviously with social media, like that's just like, in my face 24/7, and even from things that are non like ladder based, so not even career based. Because LinkedIn can create that environment. I think it's the best platform 100%, but that's not to say that not to say that it doesn't encourage people to think like this. But has that always been around? So like people in investment banks were always worried about people getting above them, or people that were starting different careers.
Yeah, I think it's just kind of natural human competitiveness, but I think it's much healthy to be internally competitive in terms of wanting to achieve better results compared to what you were achieving yesterday than being externally competitive where you need that badge or that shield or that accolade from somebody else.
What's funny there as well is the fact that the external motivation will run out eventually.
Yeah.
Like you can do it for a couple of years, you can make a good bit of cash from it, whatever, but there will come a point where that doesn't work. There is that kind of like that kind of issue. So I suppose when you're doing it for the right motives, it's a lot different.
Was this "I'll be happy when" fallacy, isn't it? Yeah.
Exactly. And I want to say something on that as well. So like I had someone say to me recently, they were like, like when are you gonna, go out and do your own, like when are you gonna do the next thing or next thing? Like what's your goal? Like what's your roadmap? And I was like, man, I'm living it. I was like, this is my roadmap. Like I was like, I'm not like waiting to go start a new thing, I'd love to start a few things and there's a few things that I want to start in the future. But it's not like I'm waiting until I get more experience. I'm just living it at the moment. So of course it's
Yeah.
a slog and it's difficult and it's busy and it's stressful, but living in that moment, you're already living that dream or that you're trying to build. And of course, the result of that you might want to get, the North Star, maybe the financial benefit, maybe the time, you might want more time and freedom, but you're pretty much living in that journey though, continuously.
And that is just an awesome attitude to have, man. Yeah, I applaud you for that.
Let's wrap it up on that time. On that note, where can people find your book, your course, and all your stuff?
So if people head over to www.taoftrading, that's taoftrading.com/kickoff. There's some resources there that will help people out. They can get the first chapter of my book for free. My book's available on Amazon, and they can also have a look at some of my courses at a pretty hefty discount for your listeners.
Man, thank you so much, Simon. Thank you so much, my man. I appreciate it. We'll do many more
Pleasure,
in the
Darren.
future.
Sounds great. Thank you for having me again.
Of course, man.